Stock market investors have raked in moolah ahead of the ICC Men's World Cup, which began in India on October 5. At the bourses, shares of HLV Group, Chalet Hotels, Lemon Tree Hotels, and the Indian Hotels Company have surged up to 154% so far this financial year. Those of Indigo and IRCTC have jumped up to 25%. Within the quick service restaurant segment, shares have risen up to 40%. By comparison, the Nifty 50 has gained 12% during this period, while Nifty 500 has advanced 18%. But as the World Cup season kicks off, is there more money to be made in these stocks?
Obviously, the benefit of a World Cup will be there in 3Q, and especially in host cities, we will see the rates go through the roof. But if we talk slightly from a longer term standpoint, if you look at the hotel industry room supply over the next couple of years, it should be in the band of about 5 to 6%, whereas demand is expected to be higher than that, which essentially means that we will see a RevPAR increase in FY25 as well. So our sense is that the hotel industry still has some legs from here on.
According to a Jefferies report, average rates for the World Cup match days are up by 150% for select hotels compared to the week prior to match day. Some room rates have gone up to the extent of 13 times. That said, while the World Cup and year-end festive and holiday season is keeping analysts bullish on hotel stocks, they remain concerned about the airlines and QSR sectors.
The domestic demand for airlines took off due to the festive season and Cricket World Cup. Therefore, the air traffic will soar high in the cloudy airspace, benefiting the aviation industry. However, the potential challenges should not be overlooked. Crude oil prices have reached $95 per barrel in 2020-23, the highest levels this year. If these elevated prices persist, they could drive up the airline fuel cost, potentially impacting the company's margin profile.
On October 1, aviation turbine fuel prices for domestic airlines were hiked by 5%, pushing prices to their highest level since November 2022. Parul Rao of Samco thus advises investors to stay away from airline stocks for now. As regards QSRs, analysts believe investors need to keep a watch on the margin trajectory of related players as retail inflation remains above 6% in India. Motilal Oswal Financial Services picks Varun Beverages, United Spirits and Zomato to play the consumption theme. Overall, as consumption-related stocks hit the ball out of the park ahead of the ICC Men's World Cup, analysts suggest investors buy selective stocks on declines. On October 6, all eyes would be on the Reserve Bank of India's monetary policy outcome.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.